Good morning, everyone. Hope you're having a wonderful weekend. It's JJ at microefutures.com. I'm going to talk a little bit about the incredible week we had, which followed a crazy week prior to that. So, in 2 weeks, the market has gone from 5,600 down to the 5,100 level. Didn't break 5,100. So, we went from, over 5,600 down to 5,100, and now back to 5,578. Okay, most of you are wondering how this happens, and there's a really simple answer to this. It's a simple answer that nobody talks about. I have no idea why, but something called structure affects how a market will trade. Structure affects how a stock will trade, how a futures market will trade. Markets are structured in a certain way. If you don't understand that, look at a company. It will have an outstanding, or it'll have an authorized share amount, an outstanding, an issued out, an outstanding, and then what's actually in the depository trust system that's available for trading. Most of the large cap companies that we know, they trade a fraction of what we used to call their floating supply. Okay, which means the business model of the current capital markets is to gather assets and charge a fee. In a low interest rate environment, you just keep adding to your assets. The assets keep getting marked up, and the large trillion-dollar money managers pay for their positions in cash. Speculators, however, access margin. And margin is great as long as the market is stable or going up. Once the market stops going up, people who are margin speculators of size at certain areas, they get caught in what we call a distribution, right? The large traders position themselves and distribute. That's what we call smart money. The people who buy the highs and get caught in these distributions, they get flushed out when margin call selling happens. Now, as the great Walter Deemer says, margin clerks trade like a herd of elephants. They have absolutely no finesse when they're selling out. So, what does this mean? And how does this apply to retail traders? Well, there's a reason why they revoked your day trade margin when this move happened, because retail traders are only going to get hurt, and they're going to end up exposing brokerage firms to large losses. So they jack up the margin, they keep retail out of it. The market sells off because large margin calls occur when people have borrowed against equity positions, and those margin calls force liquidation. So, for example, if you are long 5 million shares of a stock and you haven't paid for it in cash, well, when your bookie, your margin clerk calls and says, "Hey, listen, we need this amount of money in the account, otherwise we're selling you out," and you don't send that money, or you tell them, to do something rather impolite and hang up the phone, they sell you out of that position. So how that happens is, if they've got 5 million shares for sale, or 20,000 contracts, or 30,000 contracts, if they see bids lower, they will gun for those bids and they'll go right through you to get them. And that's why they raise margin. So I know that because all I've done my whole life is sell size, and I've been the one sometimes when you have to sell and there are large bids underneath, you will go hit those bids and you will take out anything like a train falling off a cliff. And if you can actually visualize that, train loads of product falling off a cliff looking for someone to catch it, then that's why you get these massive moves in these markets, right? It's a speculation market. Okay, so that's what's going on. That's the mechanics of it. I went on a little bit longer, but you folks should understand what moves these markets. Okay, now what the heck happened? Now, because the large institutions buy stock and hold it for a 30, 40-year time frame, it's paid for in cash. You'll notice that BlackRock, Vanguard, and these companies did not get out of their large positions. Okay, Mr. Buffett pared his Apple position, but that's just one of the players, right? And I'm sure somebody happily bought it. Now, what happens is, once you've sort of wrung out, think of this as a towel. and it's full of water, and you squeeze all the water out of it, collect it, take it back up, and go back to sell. So now what has happened is the wholesalers have reestablished their cost basis between 5102 and 5190, right? Back and forth in this huge zone, cleaned it. It's like a washing machine going back and forth, trapping shorts, trapping longs, trapping shorts, trapping longs. Finally, we've got everyone's position. You can see the volume there. Now you just cut the supply, let the market push up as the shorts were short underneath 5100, underneath 5278, and underneath 5366. They realize, oh my gosh, we're short, and they race to cover. That's why you get those big green candles when the shorts finally realize that they're short in the hole. So we've got gaps in the market. I'm going to show you on a market profile chart. We have a series of gaps. We have a gap here, and then we have a very big gap here. These are supply gaps. That means that there is no supply. Supply is shut off. The cost basis for the short-term traders is under 5,400, right? We're going to go sideways here. Now, here's the big thing, okay? You big kahuna, big gun traders, 55.84. You're looking for a look above 55.84 and a fail if you want to short it. If we can't get back up over 55.84, it will rotate back down, probably down to 55.11, right? That's a good short for you. The zone is 53.42 to 84. We came through it on the downside in basically 3 days, 2 days, broke it, and then it took a few days to get back up. But this massive area right here, and they won't tell you this, that big space is the overhanging supply being flushed into these lower bids. And now look for sideways distribution up here going into the last 2 weeks of the month. Take a look at that. The next chart I'm going to show you is how to prepare for the Globex Open or the night market open tomorrow at 6 p.m. Eastern Time. So, larger traders, if you are shorting this area, if we accept over 55.84, watch your whiskers, govern yourselves accordingly, as the penguin, my old client, would say. Okay? Which means if we start taking out these upper levels, don't fall asleep at the switch. Eh? If we accept back underneath 84, your first target is 70. Then we're looking at 55.49. That's the overnight low from Thursday night. But here you will see this is the low from Friday at 55.60. Sorry, 55.50. And the low from Thursday right there underneath 28 and three quarters, those are going to be your swing lows, right? Any kind of size takes those out, you'll get some liquidation, hopefully. Now, the problem with the liquidations in this market the last couple of trading sessions has been there's been so many people short. Every time the market liquidates, the shorts come out of the water like alligators to grab the chicken. That's why it's holding up here the way it is. We have a massive short position here. Any break of the Thursday low will try and get into that gap. Now, normally in uptrending markets where there's no overhanging supply, you go sideways for quite a while before you come back for a gap fill. We saw that for the last 3 years. Now we've got some supply. Let's see. 84 is your telltale. If you get up over 84, don't be short, right? Or manage your position with size, okay? If we get back underneath 84, you're looking for these lower levels. And if we get into that gap, we don't know what kind of bids are in there, so let the large traders work that out. Okay, that's kind of a swing time frame. Now let's go to a day trade time frame for Sunday night. We closed at 55.80. All right, 55.80 closed. The point of control is here at 78. So that's where the cost basis is, right? Think of the blue area as a car lot. You got your expensive cars like your Bentleys, and then you got your clunkers down here, okay? This is just a distribution chart showing where people were buying product. Sales chart, right? 80 is the close. So if we open and you say you're short, if we can't break 55.78, it's going to rotate up and your target's going to be these upper stops here at 55. 81 and a half or 81 and three quarters, and then 82 and a half, the upper stop at 83 and a half. 84 is right there. So there's our 55.84. So for you folks trading Sunday night, if you're shorting, and it starts taking out these levels, then 84, you got to watch. If we get accepted out over 84, there's not much selling at nighttime. There's that swing high at 5,600, right? That we got to watch out for. So be careful because we don't know what's lurking in here for resistance. So be careful if you're shorting. Now, if we stay under 84 and we take out 78 quarter, look for 76 half, then look for the next low at 55.71. These are what we call structural stops based on where traders would put their stop if they were long. The more time a stop lasts, the more people may probably use it. So when it breaks, you get more selling. Okay. So next low, 67. That's the F low, right? And then getting back to the E low is at 60, 55. This way, we can actually manage our expectations. We're not just shorting going, it has to go lower. Because if we short and it can't take out 78, it's not going to go lower. It's going to rotate and look for supply, look for people willing to sell at higher prices. It's a market, folks, okay? If anybody tells you that this is random when billions of dollars are on the table, I've got some oceanfront property in Saskatchewan to sell you. All right. None of this is random. This is all business. Okay. Treat trading like a business. You'll do fine. Okay. Watch these upper and lower stops, right? Let the market open. Let the large traders show you direction. Okay. But if you are an opening range junkie, there's your opening range 78 quarter, 81 three quarters, and there'll be action back and forth at the close because people are programmed themselves and the machines to execute buy and sell orders at close at very, very obvious places. The close, previous day high, that's where you're going to get lots of lots of action. It's the hot club that everyone's at. Anyway, that's what we're looking for going forward in the week. Have a wonderful week. Trade smart. Be shrewd, right? As we say in our room, folks, we are going to be long-term greedy, right? We want to be here in 5 years, 10 years, 20 years. Respect your capital. If you want to learn how to trade using common sense and good business practices, right? Run an efficient business. Come see us at microefutures.com. I'm JJ. Have a wonderful weekend. Enjoy the beautiful August sun. Thank you so much. Bye for now.